Good morning. All righty. Markets are down. Question: do we buy the dip? Buy the dip. Intraday traders got it yesterday and worked for a while. It was interesting. Right back down later in the day. Anyway, one of the comments from yesterday was we wanted to see sentiment move lower. The buy the dippers stepped up again with the calls. I mean, at some point, something that's been working stops working. And the option traders, they've been quite fortunate historically with buying the dip and sentiment being up where it's been. But this is the day-to-day sentiment down here. Excuse me. And, this low level into a down late in the day, it was up earlier, but, this is not down at a bullish level yet. Maybe I would suspect if the market stayed down throughout the day, it would probably go there. This is not going to go to a bullish level. I mean, we'll monitor the put call ratio intraday to see if we get some kind of spike to the upside. If historically, for short-term bottoms, you get the total put call ratio set and alert at 1.3 and 1.5. Now, those are historical levels. Now, this market has not been around historical levels for a while. So I don't know if it'll get up there, even as maybe if this correction progresses a little further than what they have in the past, it will. But historically, those are very reliable reference points intraday for the market to bottom, similar to, not quite as accurate, I would say, as NYSE tick going down to minus 1,000 or lower after markets have been declining for a bit intraday. Similar to something like this, as it's selling off, and then you get a high tick reading, and we typically get another new low and a higher tick, and the market bounces. Anyway, breadth did not go down and just kind of flipped a little to the downside yesterday. It's not an extreme. This is not an extreme. We'll see what happens today. All right, so you can see the S&Ps pushing down through the 20. Yesterday we spoke about there's nothing to the left. This is the area of support. It's close to being there. These overlapping opens and closes there. So we'll see if it holds that level or not. Scroll this over here, get a little more data, and you can see, that area. So the concept from Master Trader Swing Trading course and the MTS course is a cluster of opens and closes in a higher time frame is going to be a base of consolidation in a lower time frame. So here's an ideal example of that. So the S&Ps got close to there, popped up, formed a pivot low, and it's possible, and I would say probable, as this goes down into this level intraday, the indicator aficionados will get a bullish divergence, whereas we just look at the momentum, meaning this is strong momentum to the downside. I think that's obvious. Typically what happens as a market, whatever stock, doesn't matter what it is, begins to lose momentum to the downside, the distance between the lows get closer together. So that's something we'd be looking for, that type of price action in an area of support. And so price patterns are one concept, locations of where they form are another concept. The bottom ones are the put call ratio. I just saw your comment, Tony. I go back to, yes, it was. That's what I was pointing to. The bottom histogram, if you will, those bars are day-to-day closes of the put call ratio. And then above that was breadth. And then we have the McClellan oscillator, which is our intermediate term breadth gauge. And then the 5MA of the closing put call ratio is the moving average of sentiment. All right, so this is, the breakout failure. And so far, this is a normal pullback. to an area of price support where if it's going to form some kind of a reversal pattern down here. And I suspect that'll probably take into the latter part of the week. Now, while that is our view, it's got to form a reversal. And so that's part of our method is like we can look at a trend and look at whether it's up, down, or sideways, look at to the left of where's their support and say that, hey, somewhere between here, historically is where reversal would form. Well, why? Because of the strength of this momentum move to the upside, that this is a normal type of a pullback within it. And now we wait to see what happens. And as it gets down to that location, we can then even go down to smaller time frames and look for patterns like this to begin to turn around. So the NASDAQ is getting shellacked, right? And this is a great example of why even moving averages, which we use, are subjective. Prices cut through that like it's not there because it's just a line. And, those that promote things like, if the 50 MA being price support, it can become a self-fulfilling prophecy. You got those that'll go out there commenting that a 200-day moving average is like the wall of China. Right? It's just a line that you put on your chart and it's subjective. Yes, it's widely followed, but our method is to look to the left and say, is there anything in alignment with that to support it as a reference point? There's nothing. There's momentum move. And that's the danger of a momentum move that creates a void. There's nothing below. So if buyers don't show up and demand increases, prices go down to the next level where traders and institutions feel comfortable feeling that at that support level, the reward to risk is worthwhile. So now the weekly chart, it's only Tuesday, but this weekly chart is starting to take on a more bearish look. It isn't an uptrend, but the depth of retracement, after 1, 2, 3, 4, 5 days, you could say 6 days, 6 weeks of consolidation and a wide range bar closing at the high, for this to happen is very negative. It's retracing down to the bottom of that wide range bar. So short-term top in place. It's still an uptrend. There's no pivots here, but this is now put the daily trend into a sideways trend. We'll see if it holds this area of these pivot lows because you got a whole bunch of them here. Right? Got a whole giant cluster. So this level over here, where those weeks of going sideways, this is a major reference point of price support. And I think ultimately, it would be virtually impossible to cut through it without a reaction. If it would do such a thing, that would not something, but the view as to what's happening in the markets would have to have become very, very negative, right? For the NASDAQ futures, McGraw. Yes, no. So for those of you on YouTube, Trader McGraw in the green room, who follows Gamma, I believe that's the speed at which options move and how that relates to reference points of turns or where there's support or resistance, saying 12,500 is a Gamma reference point. Now, whatever McGraw tells me, as far as Gamma, which I don't really understand, I see, does it make sense based on support or resistance? I've seen plenty of methods that don't, but pretty much this Gamma idea, which is interesting, tends to line up. So, coming down to this level, that's your first level, and then you got other levels right here. So it's a big, wide level. Whether it actually gets down here, we shall see. Right. So we know that somewhere in here, right, whether it's here or here, buyers are going to step up. That being said, the speed at which price came down here, cutting through this, coming through here. We're going to, at a minimum, be in a trading range for a little while. The markets is what we call repairing the damage, right? So we'll see how it unfolds, right? So the theme or title in YouTube today was buy the dip. Well, as an intraday trader, sure, there could probably be an opportunity to buy the dip, but not from a swing trading perspective, not yet. All right. The Dow was amazing yesterday. Right? I mean, it gave back at the end of the day, but it moved all the way up, while the others were going down initially, and then they rallied, but it ended with a bottoming tail bar, and in the end of the day, went nowhere. Just based on the closing prices, you could see they're all clustered there. So we'll see what the Dow does here, whether it goes back down to the lows today, makes a higher low, whatever, inside day possibly, but it's been showing relative strength. Boeing was up and then it gave it back at the end of the day, was a big green bar. Like, there was the negative news and got bought. Amazon weaker than the broader market. John is asking me, yeah, it's been, John. And, Dan and I have been telling subscribers to the weekly options trader, the ETF trader, and the advisory letter, this is a problem. The FANGs weakening, tech weakening, and so on. So look, at some point, every market corrects, but they all, whether it's to the upside or the downside, they go too far. And they truly make you doubt whether the market will ever top out or will ever bottom. I mean, I've been doing this about 30 years, and, I've thought that numerous times, but eventually they all correct. All right, Russell, or bottom out, of course. Now, this is interesting. It's been showing relative strength, as we all know. And so now the question is whether this could possibly hold this low and make a W, can hold up here, because the institutions are just loving, the small caps, but maybe they're just, glazed over the eyes. They're so in love. And I'm wondering if this turns out to be a measured move, whereas, it made the turn here, little to no support, but a rising 20 MA. And this could put it down here at the 50. Should the market continue to correct, which it looks like, what we're seeing here pre-market anyway, like it will. So this may eventually work its way down to this level. Bonds are coming down to what we've been talking about for months down here, with interest rates going higher. So somewhere in here is where this is going to turn around. No sign of it yet, obviously, but it's coming into the area. And gold, starting to make that turn. I've been talking about this way too long. But we'll see if this actually holds here by the end of the week. Silver did great. Had a great day yesterday. We all participated in the green room. Many of us did, in either a silver stock or a ETF. So this cleared this high. It's consolidating here today, and it should work its way higher, which is hopefully gold is going to follow. And of course, a lot of people, they were talking, not the first time I heard it today, but, the view that Bitcoin is now taking over the idea of gold and, inflation hedge and so on. And maybe so, and things change. This Bitcoin has had a monster move, and, it's pulling back. It's just like anything else. We'll see as it pulls back. You can see that it's beginning to form a little, not beginning, holding in this little support level right here. So no matter what we trade, it's all about looking to the left, right? Where's there been a consolidation, where there's been a pivot. And that's it. I want to look at all the transports. did well yesterday. So this is a good sign for the markets, meaning, whenever there's a correction, right, everybody starts thinking, is this the big one? Right? And when you see the transports outperforming, the yield curve is continues to steepen, which is great for financials. I didn't look at them today to see how they're doing this morning, but um, they're holding up okay. Anyway, it's not the big one. Markets will correct here a bit. We'll see how far it goes. And we'll look to our eternals to get into alignment here and give us another signal. And then, of course, reversal patterns on the daily chart. So all yours, Dan.
All right, good morning. So we've been trimming down our positions. We got out of some trades yesterday beautifully at nice profits. We're not having to sit through this gap down at all. Believe it or not, I didn't have one single alarm go off of this morning of our open positions. So some things are pulling in, but they're fine. We still have a couple airline positions. Our little Trivago we bought yesterday, that's giving it up a little bit right now, but that was up pre-market. What else do I got here? OIH, we did a put spread. That's it's fine. Let's see, we had a Netflix that gave us a little bit of pain yesterday on the retracement, but as I do with any open trade, I'm like, all right, well, let's talk about it. Is that a reason to get out of the trade? No. Was it a reason to do a condor? No. So we sat through it. And now we're getting a $10 gap down. So now we're going to have a nice open game. Hey, Peter. So the only, when I got up this morning, like first thing I do, put on channel 470, CNBC, just to see what the futures are doing. And I saw spiders way down. And then I see diamonds, even though it was only 26 points, they were up. And I'm like, wow, something. And that's after I saw Home Depot down $6. So just my brain immediately says, well, then there has to be some strong things in there that are counterbalancing Home Depot. And I'm looking right now, CAT up $1. I mean, Boeing was up $2 or whatever pre-market, so that actually helped us. Nothing up really big, but we do have a put spread on Boeing that we did on this amazing retracement yesterday of that negative gap. So we got the 210s. That's holding our breath here that this just chops around and holds. So that's it on opens. Miscellaneous comments. Futu I have as a call spread candidate. Remember, Riot was a open post yesterday, 30-minute low. It did not trigger, but I left it there. I said if it does take out yesterday's low, we're going to sell at 80 and higher call spread. That still looks good. Tomorrow. Same, looks lower. This M Macy's I just posted as a put spread watch. It's gapping up on earnings. So maybe 30-minute high. We can sell the 14.5 on put spread, but I'm not rushing into anything at the open. Let's get some opens. Diego's asking about PBR Twitter. Yeah, PBR got whacked yesterday. That was Bolsonaro, the Brazilian president. I guess the news was they put in a military president of PBR. So that to me kind of sounds like a takeover, right? A government takeover. But yeah, pre-market, I like the gap up. Let's see if it holds. I'll put that here, Diego. But it's a candidate. It sure is. Sure is. The daily, it's total destructive mess. but we're not trading the daily. We're trading this huge price void on the 15. Let's see. And you said Twitter for short. South America. Yeah, Brazil, South America. Yeah. Yeah, Twitter. Hey, remember I've been watching this for a while for a call spread. Now we're getting the gap down. Yes, 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 yes. That's a small little M top. That looks fantastic, Diego. Um, as a, it's going to be a little harder when you get the gaps that are too big. It's a little harder to initiate new trades in that direction. But this is a definite candidate for a day trade short, maybe even swing short, and call spread. Let me post this to our weekly folks right now. That's a beautiful little M top topping tail retest. I like it. All right, let's continue here. Zulu India, 55 bucks. It's a bullish gap, but a mess. Kerbal is a restaurant. I can't tell where it's gapping, but restaurants have been doing very well. We actually have short, we got to put, we're short of 120 puts down here. Nice, beautiful, beautiful turn here, and then a bullish 1, 2, 3 on the weekly. UIS, I see one print down here. I don't trust pre-market unless they're liquid, but I'm going to set an alarm on this. If it, in a weak market, that's a bullish daily, weekly. I'm going to set an alarm here, 2670. If it can take out yesterday's high, even in a weak market, then the odds suggest it's going higher. That looks great. All right, alarm set. That's back, big mess, but it's in a downtrend. No interest. Delete you. And W. Well, it had earnings, so we couldn't do it, but beautiful breakout failure, wide range breakdown bar. That's a beautiful pattern for a call spread, and it is gapping down. So that this is, again, earnings, I think, and therefore premiums will be high. So that is a call spread candidate. IR, no pattern. NDSN, no pattern. AL, I can't tell where it's gapping, but it's bullish. We'll come back to it. BCC 54, gapping to the top of the range. That's worth watching on a pullback. Norbert here, there's a couple of them. BlackBerry. I'm assuming you're talking short because that's gapping under these 3 bars. And now it's a sell setup pre-market, Norbert. That's what I'm assuming you're asking me. Wait. What? You're asking me money bar. Is BB a money bar? If you're talking about the topping tail that took out these things and these highs and came back here, I think Greg has a very specific definition of money bar. For me, it's more broad. For me, a money bar is more of a gotcha bar. It's a something something. And this one does look lower, but I don't know. I wouldn't call it a huge something something. But yeah, there's a price void. It looks lower. JRMOH and Disney. Yeah, that's beautiful. I can't tell where it's gapping, but wide range bar, sideways consolidation. Yes, there's resistance to the left. Yes, but the concept of bullish price action near resistance, it's slowly nullifying it, and then the next level higher is is very high. That could go to 235. So yes, I like Mo as a watch. Disney was on fire yesterday with the whole travel industry. Uh, they just made a comeback. Jets, cruise ships, the wind we talked about in the green room. I mean, so much junk of the leisure comeback was ripping yesterday. And but we've been in them, and it's Greg was saying yesterday, and I say about every other day that the silly media puts stuff in your head, and then that becomes a theme. Although the charts tell us when to get in. For example, we've been in jets for a long time. We've been in TBT yields for a long time. And now it's plastered all over the paper and CNBC. But that's the way it works. I'm not shocked. We predicted it. Starbucks short under yesterday's low, but I see it popping here now, so kind of neutral. Let me continue on my Coke alarm. Look, my Coke alarm went off. See, it just popped pre-market. Coke looks fantastic as a 5-minute high. Let's buy I'm not doing anything at the open, but if this can hold here and take out a 5-minute high, then you got a beautiful price void. Lauren, let me look at ABC. Hold on. Yeah, 5-minute. Not seeing the comments. What does that mean? What does that mean, John? Not seeing what comments? All right. ABC. I don't like it as much as Coke, but yes, it's not bad at all. But I would give this one like a 30-minute high, maybe. We had that MT live on the turn, TURN, and it's definitely made the turn at the 50 and major support. So yes, I like it. It's just a matter of getting the entry time with the market. Wow, look at Macy's here going crazy. Look at that tail. It just went up to 6. Wow, this thing's all over the place. The trading options in the first 5 minutes on earnings, good luck. The spread's